Breaking news. The 2-week war that rattled the entire world is officially over. Just hours ago, President Donald Trump announced a complete ceasefire between the United States, Israel, and Iran, bringing an end to nearly 14 days of intense conflict that had markets on edge and global supply chains under threat. This was no ordinary skirmish. The war saw direct strikes, missile exchanges, and a critical closure of the Strait of Hormuz, the world's most important oil choke point. Energy prices spiked, inflation fears surged, and investors rushed into safe haven assets like silver and gold. But now, with the guns falling silent, a new chapter begins, one that could send positive ripples through the silver market. Here's the key detail you might have missed. Pakistan played a small but absolutely pivotal role in making this ceasefire happen. Pakistani Prime Minister Shehbaz Sharif and Army Chief Field Marshal Asim Munir stepped up as trusted mediators. They proposed a smart two-phased truce plan, an immediate ceasefire followed by 15 to 20 days to hammer out a full settlement and reopen the Strait of Hormuz. Pakistan acted as the main communication bridge between Washington and Tehran, with Munir in round-the-clock talks with U.S. officials and Iranian Foreign Minister Abbas Araghchi. Their Islamabad Accord framework was the breakthrough that got both sides talking. Without Pakistan's quiet diplomacy, this ceasefire might still be stuck. Huge respect to Pakistan for helping de-escalate a conflict that was spiraling out of control. So why does this matter for silver? Let's look at the numbers, current versus old values, and how this ceasefire is set to deliver a positive reaction to the silver market. Right now, as of April 8, 2026, silver is trading around $72.50 to $73.45 per ounce. That's after weeks of war-driven volatility. Before the ceasefire announcement, and during the height of the 2-week fighting, silver had already been pushed higher by safe haven buying and energy shocks. But the uncertainty also created wild swings. Compare that to pre-war levels earlier in 2026. Silver was trading significantly lower in some periods before the conflict fully escalated, with prices in the 60s to lower 70s range in calmer times earlier this year. The war added premium due to fear, but now the fear is lifting. Markets are already showing early signs of stabilization, with a slight positive tilt as investors digest the good news. This ceasefire removes the biggest risk premium that was inflating silver prices artificially. With the Strait of Hormuz expected to reopen soon, energy costs should ease, inflation pressures cool, and global economic confidence can return. That's bullish long-term for silver, both as an industrial metal, used in solar panels, electronics, EVs, and as a store of value in a calmer world. Short-term volatility may settle, but the overall positive reaction is clear. Lower risk equals stronger, more sustainable demand for silver going forward. That's the big picture on the news, and Pakistan's quiet heroism that helped make it happen. Silver isn't just reacting, it's positioned for a positive shift we're going to explore in depth in the rest of this 20-minute video. This is huge. The ceasefire just happened, and silver is ready to shine brighter. Now let's dive deeper into exactly how this ceasefire is set to react positively for the silver market. With the immediate risk of wider war removed, several powerful forces are now shifting in silver's favor. First, the risk premium is dropping fast. During the 2-week conflict, fear drove investors into safe haven assets. Silver prices climbed as uncertainty peaked, with wild swings caused by missile exchanges and the Strait of Hormuz being blocked. But today, just hours after President Trump's ceasefire announcement, that fear is easing. Markets hate uncertainty more than almost anything else. As the guns fall silent and talks begin in Islamabad, that war premium starts melting away, allowing silver to find a more stable and fundamentally supported level. Look at the numbers side by side. Before the conflict escalated heavily, silver was trading in a calmer range earlier in 2026, often between the low 60s and mid-70s in quieter periods, with some spikes but without the extreme war-driven volatility. At the height of fighting, safe haven buying and energy shocks pushed it higher, reaching into the 70s and occasionally beyond amid panic. Right now on April 8, 2026, silver sits around $72 to $73.50 per ounce after the initial market reaction to the ceasefire news. This is actually bullish long-term. Why? Because the ceasefire clears the path for the Strait of Hormuz to reopen within the next 15 to 20 days under the two-phased plan. Lower oil prices and reduced shipping risks will ease global inflation pressures. When energy costs come down, it supports broader economic growth. And silver loves economic growth because more than half of all silver demand comes from industry: solar panels, electric vehicles, electronics, 5G, and medical applications. A calmer world means factories run smoother, renewable energy projects accelerate again, and industrial buying of silver can pick up strongly. Pakistan's role here adds even more stability. By hosting the next round of talks starting soon and acting as the trusted bridge, Islamabad is helping ensure the truce holds and the strait reopens smoothly. This reduces the chance of sudden disruptions, giving investors confidence to look beyond short-term fear and focus on silver's bright industrial future. Short-term, we may see some profit-taking as the war premium fades and silver settles. But that dip would be healthy. It creates better entry points. Longer-term, the positive reaction looks clear. Lower geopolitical risk plus returning economic optimism equals rising demand for silver as both a precious metal and a critical industrial resource. Silver isn't just surviving the ceasefire, it's positioned to thrive once the dust fully settles. Reduced chaos means more predictable supply chains, stronger industrial orders, and renewed investor interest in metals that benefit from a growing global economy. That's the core market reaction in a nutshell. In the next parts, we'll break down exact price forecasts for the coming weeks and months, the industrial demand numbers that could drive the next leg up, smart ways to position yourself, and what this all means for your portfolio in this new post-ceasefire world. The ceasefire just happened, and silver has every reason to shine brighter ahead. Stay with me for part 3, where we look at the charts and specific price targets. With the ceasefire now in place thanks to the two-phased plan and Pakistan's mediation efforts, let's look at the specific price reaction we can expect for silver in the coming days and weeks. Right now, as of April 8, 2026, silver is trading in the range of $72 to $73.50 per ounce, following the initial market response to the news. This level comes after significant volatility during the two-week war, when safe haven buying and energy shocks from the closed Strait of Hormuz pushed prices higher amid uncertainty. Compare this to pre-war levels earlier in 2026. Silver had already seen major swings, trading as low as the mid-60s in calmer periods before tensions escalated, then climbing into the 70s and occasionally higher during peak fighting due to fear-driven demand. At one point earlier this year, it even touched much higher levels around $100 plus during intense market moves. But the war added extra premium on top of that. The ceasefire announcement is already starting to remove that war-related risk premium, as investors realize the immediate threat of wider conflict is off the table, and the Strait of Hormuz is set to reopen within the next 15-20 days under the Islamabad framework. We should see short-term stabilization. Some profit-taking from the war spike is likely, which could cause silver to dip modestly in the first few trading sessions. But here's the positive side. This dip creates healthy buying opportunities. Once the strait reopens and energy prices begin to ease, global inflation pressures will cool. Lower energy costs support stronger economic activity worldwide, which directly boosts industrial demand for silver. Over half of silver's use comes from industry. Think solar panels for renewable energy projects, electric vehicles, electronics, and advanced manufacturing. A calmer geopolitical environment means these sectors can plan ahead with confidence and ramp up orders. Analysts are already pointing to a bullish longer-term outlook. With reduced uncertainty, silver can shift from pure safe haven mode back to its dual role as both a precious metal and a critical industrial commodity. Pakistan's successful bridging role adds extra stability. By keeping communication open and hosting future talks, it lowers the chance of sudden flare-ups that could disrupt markets again. In the short term, expect silver to trade in a $70 to $75 range as the market digests the news and waits for the strait to fully reopen. Medium term, as economic confidence returns and industrial buying picks up, the path looks higher. Many forecasts for the rest of 2026 see silver averaging well above current levels, supported by structural supply deficits and growing green energy demand. The ceasefire isn't just ending a war, it's clearing the obstacles for silver's fundamentals to shine through again. Lower risk means more predictable supply chains, stronger industrial growth, and renewed investor interest in silver's bright future. That covers the immediate and near-term price reaction. In the next part, we'll break down the exact industrial demand numbers, why solar and EV sectors could drive the next big leg up, and how this ceasefire changes the supply-demand balance for silver. Now that we've covered the immediate price reaction and near-term outlook after the ceasefire, let's look at the powerful industrial demand story that could drive silver much higher in the months ahead. More than 50% of all silver consumed globally goes into industrial uses, and this is where the ceasefire delivers a clear positive boost. During the two-week war, the closure of the Strait of Hormuz spiked energy prices and created huge uncertainty. Factories slowed orders, renewable energy projects faced delays, and supply chains tightened. That uncertainty capped industrial buying, even as safe haven demand pushed prices around the $72 to $73.50 level we see today on April 8, 2026. Compare that to earlier in 2026 before the conflict escalated. Silver traded in a wide range, starting the year around $71, $72, surging to over $120 at its all-time high in January due to strong momentum, then pulling back sharply into the 70s and even dipping toward the 60s in volatile periods. The war added another layer of fear premium on top. With the ceasefire now active and Pakistan's two-phased plan paving the way for the Strait of Hormuz to reopen in the coming 15 to 20 days, energy costs are expected to ease quickly. Lower oil and shipping expenses reduce inflation pressures and give manufacturers confidence to ramp up production again. This is especially bullish for silver because key growth sectors are hungry for it. Solar panel manufacturing is exploding as countries push renewable targets. Silver is essential for the conductive paste in photovoltaic cells. Electric vehicles need silver in batteries, switches, and electronics. 5G infrastructure, AI data centers, and medical devices all rely heavily on this metal too. Once the strait reopens and global trade flows normalize, these industries can accelerate without the constant worry of disruption. Analysts expect industrial silver demand to rebound strongly, helping offset any short-term dip from reduced safe haven buying. Pakistan's successful mediation adds another layer of stability. By keeping channels open between Washington and Tehran, it lowers the risk of sudden flare-ups that could scare off industrial buyers again. The supply side also supports higher prices long-term. Silver mine production has struggled to keep pace with demand for years, creating structural deficits. With the war premium fading and economic activity picking up, this tight balance tilts firmly in favor of rising prices. In simple terms, the ceasefire shifts silver from being driven mostly by fear to being driven by real-world growth. Short-term stabilization or mild pullback is possible as markets digest the news, but the medium to long-term outlook brightens significantly thanks to returning industrial strength. That's why many experts see silver not just recovering, but potentially pushing toward new highs once the dust settles and the positive fundamentals take over. In the final part, we'll put it all together. Exact ways to position yourself in silver, portfolio strategies post-ceasefire, and what this means for everyday investors watching the market right now. We've covered the ceasefire news, Pakistan's important mediation role, the immediate market reaction, near-term price outlook, and the strong industrial demand boost ahead. Now let's put it all together with practical ways to think about silver in this new post-ceasefire environment. The two-week war is over. Thanks to the quick ceasefire announced by President Trump and the two-phase truce plan supported by Pakistani diplomacy, the biggest source of uncertainty, the closed Strait of Hormuz and risk of wider conflict, is being removed. Energy prices should ease as shipping lanes reopen in the coming 15-20 days, inflation pressures cool, and global economic confidence can start to recover. Silver today, on April 8, 2026, is trading around $72 to $73.50 per ounce after reacting to the news. This follows a wild ride earlier in the year. Silver started 2026 near $71 and $72, exploded to an all-time high above $121 per ounce in late January, driven by massive momentum and safe haven flows, then corrected sharply into the 60s to 80s range amid volatility. The war added extra fear premium on top of that. With the ceasefire in place, the fear-driven spike is fading, which may lead to some short-term stabilization or mild pullback as markets adjust. But this creates a healthier foundation. Lower geopolitical risk plus returning industrial activity points to a positive longer-term reaction for silver. Here's how you can position yourself. View any near-term dip as a potential opportunity. With industrial demand from solar, electric vehicles, electronics, and green tech set to rebound strongly once supply chains normalize, silver's dual role as both precious metal and critical industrial commodity becomes even more attractive. Consider physical silver or trusted ETFs and mining stocks for exposure. In a calmer world with supportive fundamentals and ongoing structural supply deficits, many analysts see silver averaging well above current levels through the rest of 2026. Diversify smartly. Don't put everything in one basket. Balance silver with other assets, but recognize its upside potential now that the war premium is lifting and growth sectors can accelerate again. Stay informed on the next steps of the Islamabad framework. As Pakistan continues to help bridge talks and the strait reopens smoothly, watch for confirmation of de-escalation. This will further support confidence and industrial buying. Pakistan's quiet but effective role, from Prime Minister Shehbaz Sharif and Army Chief Asim Munir facilitating communication, helped prevent a bigger crisis and is now contributing to this more stable outlook. That stability is exactly what silver needs to shift focus back to its strong fundamentals. Overall, the ceasefire is bullish for silver in the medium to long term. It removes artificial war-driven volatility, eases energy costs, supports economic growth, and lets industrial demand take the lead again. While short-term moves can still be choppy, the path ahead looks brighter as the world moves past this 2-week conflict. Thank you for watching this full 20-minute breakdown. The guns have fallen silent, the strait is set to reopen, and silver is positioned to benefit from both reduced risk and renewed growth. If you're feeling positive about silver's outlook post-ceasefire, drop a like, share your thoughts in the comments, and subscribe for more updates on metals and markets. Let me know what you want covered next, perhaps deeper charts, specific investment vehicles, or how this affects gold too. This is a historic moment. The ceasefire just happened. Pakistan played a key bridging role, and silver has every reason to shine brighter in the months ahead. Stay safe, stay informed, and see you in the next video.